Good evening everyone, Ads here from Unity Trading Group. Welcome to the Tuesday night update. Before we begin this evening, hit that like button, tap the subscribe button, and of course tick the bell to stay updated and stay notified on all the content that we do every single week. Before I begin tonight, the same thing that I said yesterday, I'm going to reiterate that again tonight. Gravy Train we do have a 5-day free trial now running on Gravy Train. So if you're interested, head over to unitytradinggroup.com/gravytrain. You can even find it in the indicators tab of the website as well. And when the store does load, you will see Gravy Train on the right hand side. $31.97 a month with a free 5-day trial. So no obligations, risk free. You can cancel before the 5 days, of course, if it's not for you. And just give it a go. That's all we're saying. Just give it a go. It might surprise you. Anyway, BTC, where are we at? Where are we going? Where have we been? It's looking okay. It's looking okay. If we throw Gravy Train on there as well, we can see the validity of this and what we are looking for with BTC. So, a couple of things to look at immediately on the chart. It's the left of price action at the moment. So, you've got this solid cloud structure here that's validating our 50 Fibonacci and our level of supply up the top here. So that's looking good. It's also validating some liquidity to the left-hand side here. And you can also see the green cloud structure that has formed as soon as we have moved through the $37,000 mark now. So we are trending above that green structure. We are forming some support around the 23.6, around this area here where the cloud is starting to plateau and move to the right hand side. So it's looking like a decent level of support at 23.6. And of course you've got some support structure to the left in terms of the left hand side cloud structure there. So looking okay for the minutes if we're looking at Gravy Train. So let's look at a couple of other bits and pieces as well to see where we're at. Last night, in regards to our update, we spoke about the 23.6 at 37K. That's a nice round number for me, and that resides around this level here. And you can see the validity and the liquidity, say that 10 times fast, but the validity of this area here, because we have had so much price action occurring at this point. And if we put the VPVR on, which is the volume profile, you could pretty much see that most of the trading in this segment that I've got on my chart, most of the trading has occurred at about 36.8 roughly at that 23.6 mark. So that further validates that Fibonacci level at 23.6. If you haven't used the VPVR before, it's in indicators in the volume profile. You can use the visible range here, so VP, so you're looking at volume profile visible range, and we usually set that row size to 120, and that will change as the chart goes around. Of course, you can see where the most trading has occurred and where the strongest support or resistance at any given time is. So we're looking at a level now where we've broken past this point and we are sitting around this area here. You can see as the price moves up, there's not much liquidity sitting above us. So if we do start to ascend, it could ascend faster, it could ascend easier then it would descend at this point, because there is more liquidity here and there's less up the top. So it could ascend faster than descend. So that's the benefit of the VPVR if you haven't used it before. But further looking into this, we do have a steamroller exhaustion overbought condition at the moment. So we are just turning down. And of course we are observing the same sort of thing on the CCI and the RSI on the chart there. So it wouldn't surprise me one bit if on the smaller time frame we are to see some sort of pullback, just to cool off these indicators a little bit and to see where we'd end up. So if we're looking at the chart currently, we draw on our Fibonacci from swing low to swing high on the 1 hour time frame. So on a smaller time frame, we can see the 38.2, the 50 as well, and even the 61.8 61.8 Fibonacci, they all line up very nicely with a lot of liquidity to the left-hand side. So the 38, you can see lines up with some of this structure here. And of course, moving down the fibs, you can see how they line up quite nicely as well. So looking okay for a pullback on a smaller time frame. 38, 50, 61 would be the areas that I'd be looking for said pullback on that 1 hour time frame. I personally don't trade the 1 hour. I trade a higher time frame like the 4 hour and the 1 day, but it's always okay to look a little bit further into the chart just to see where a short-term pullback would occur. So for me, I trade on the 4 hour time frame, so I don't usually go past the 1 hour. The 1 hour is where I usually stick to if I'm looking for a small time or a small time frame pullback. In regards to my daily, I would always go back down and look at the 4 hour for a smaller time frame pullback scenario. Anyway, moving on. The one that I wanted to look at tonight is the dominance chart. So we've been looking at the dominance chart for quite some time. Generally, we look at it on the daily, but in this instance, we're gonna try the 4 hour and we're gonna see how we go. So you can see immediately on the chart, there's a couple of things to look at. And we do have a lower high scenario at this point where the dominance chart really coincides with the altcoin market and BTC as a whole. So if we're saying BTC is losing dominance, it's giving some of that market cap and it's distributing between the altcoins. So more than likely, if it does start to decline, then we'll see the altcoins ascend. And if in the opposite sense, if we do see the BTC dominance start to move up, it's taking back some of that market cap, stripping it out of the altcoins or the other coins in general, and then putting it back into the BTC pool. Of course, this allows the BTC price to rise and fall depending on which direction the dominance chart is moving in. But if we are observing a lower high currently, it seems like on a higher time frame we are continuing our descent, and this is a great thing for the altcoins because you can see immediately on the chart you've got a double top on the steamroller indicator, You've also got a divergence showing on our UTG RSI chart where we've got a we've got a higher high scenario on a 4 hour, and of course we've got a lower high scenario on the RSI. So always good to look at the dominance chart. We all trade alts, and we all try to get more BTC, more USD, whatever capital, whatever base currency you're trading. It's always nice to look at the dominance chart, the market cap. And to keep that on your radar, make sure you're trading it. Make sure, well, not so much trading it, but make sure you are looking at it. Make sure you're charting it up if you're using your own TA to really gauge what direction these coins are going to go in. Okay, Ethereum USD. So we haven't seen that come to fruition just yet in the sense of my TA from yesterday. I will leave it on the chart, however, because it still could play out, but more than likely we'll see a retracement if we are to see one to around 24.50, and that coincides with just the level of support that I'm observing and the resistance flips that I'm observing to the left hand side here. So more than likely this will be, let's redo that. This will be up here to some degree before heading to the upside at 28. But we'll keep that on the chart. We'll keep on top of this as the week progresses. Now, the one to have a look at is LTC. So LTC, I have kept in the TA, but it didn't quite get to the 78.6. We just fell short at the 61.8, which is fine because the 61.8 is the most common level in the sense of Fibonacci, or as far as Fibonacci goes. So that's okay. And it looks like we are ascending in the same sort of direction as the USD pairs go in terms of BTC and Ethereum. We'll visit Ethereum in just a second, but it is following the trend of the USD pairs. Not substantial as of yet. We are still seeing this walk up quite slowly with low volume, and you can see that volume expressed down the bottom with the bars down here, and we are still in a period of low volume. So just keeping it nice and tight with LTC. Next up, last but not least, is the Forex pair, the DXY. This is a regulated market, excuse me. Not financial advice at all, just ideas, opinions, and education from us here at UTG. And there's a couple of things that we've spoken about on the DXY over the last couple of days, and we're just reiterating those thoughts. So in this instance, I did suggest we'll probably head back to 90.235, if not further down, and we'll head down to 89.8. So that was what we were discussing yesterday. My thoughts haven't changed just yet. We are still looking like we're struggling a little bit at this level of supply, but we are hanging around and we are eating away at this level so far. More than likely, I think we'll see this at 90.80. I think the next level of supply is going to be on the cards, certainly for the DXY, but nothing's guaranteed. If we do head down, I think the first stop will be 90.235. But as we are seeing this level of supply being eaten away so far, I think it's inevitable that we will take this level down and head to the next one up. But that's all for tonight. Thank you all for joining me. I'm Ads from UTG. I'll see you in the next video. Bye for now.